Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, thank you for coming on today.
Happy to be here.
Well, tomorrow, Thursday, there's a video conference scheduled between the countries of the OPEC-plus group about possible cuts to oil output. There's resistance to that idea from the U.S. What do you see happening to oil prices?
Okay, well, the fundamental problem is that demand has fallen quite a bit because of the COVID virus. Nobody's flying. Very few people are going out of the house. So the demand has fallen, but the supply has kept up. And the agreement to limit supply between OPEC and Russia is running out. And, well, from the point of view of the suppliers, not necessarily the consumers, it's probably in their best interest to collude on production to maintain a higher price. But from the point of view of individual countries, they want to sell more oil and get more cash because, well, this is a very unstable and scary global economic environment. So some countries, I'm sure, would much rather sell more at a cheaper price and get cash now than try to collude to a higher price and sell less. But another problem in this mix seems to be the American oil producers. If you would remember, originally President Trump said that he came to an agreement between Russia and OPEC to raise the oil prices, reduce production, but apparently that deal fell apart because President Trump's deal involved American producers producing less as well, but American producers are refusing to produce less, and that seems to be a problem that has to do with shale oil companies. Shale oil companies are having a lot of problems right now because shale oil is more expensive than regular oil, and a lot of these oil producers seem to want to drive down the price of oil to a low level so that they can take over and buy shale oil businesses when they get into trouble. So we have a complex mechanics going on with Russia, OPEC, and the American oil companies. And because of that, at least until the COVID virus runs out and until the current overflow storage runs out, I would expect very low oil prices.
Right. Well, as deaths from the coronavirus surge in the U.S., stocks on Wall Street are down slightly. Here in Korea, stocks today were mixed. What's the story in the markets today?
Okay, well, the global markets are still a bit of a roller coaster, but for about last 10 days, it's been generally trending upwards. And I think part of that is because the news hasn't been as bad as people feared 2 weeks ago. We were talking about nightmare scenarios, 200,000 Americans dying or even more. But so far, happily, the numbers have turned out not as bad as we were afraid of about 2 weeks ago. So that, I think, it has something to do with the market optimism at the moment. But also, I think the major part of this is that the governments and the central banks of the advanced countries have basically tried to take on the risk that it has been caused by the COVID virus. The central bank is offering to buy even private bonds, and they are basically supplying unlimited liquidity at this time. So the firms, by exchanging their risky assets with cash, can escape a lot of risk that has been created by COVID. Because a lot of risk has been taken by the government, that has given the room for stocks to go up again. But of course, if there's other bad news coming up, and I think people are also realizing that while COVID virus may go away, the reduced demand may stay around for a while. That's causing, as I said, some of the roller coaster ride. Similarly, in Korea, I think we have that uncertainty as well. But also because things are so unstable at the moment, a lot of foreigners are taking their investment out of Korea, and that accounts for the roller coaster ride that the Korean stock market has been having lately.
Well, now we have this new, yet another stimulus package from the South Korean government. Is this a concern from the point of view of the government's fiscal soundness?
Well, yes, it is, but sometimes you do have to spend the money. And because Korean debt to GDP ratio is 38.1%, we still have some room to maneuver. But we have gone into a very high government deficit, 12 trillion won official government deficit, and if you include the social funds, then it's a deficit of 54.4 trillion won. That's the biggest we had in 10 years since the global financial crisis. So yes, it's excusable that we have this deficit now, but given our demographics, given our spending that will have to increase in the future because of the aging population, we should have some checks and balances in order so that as soon as we get out of the COVID crisis, we try to reduce the amount of deficit that we piled up.
Got it. All right, Professor Young, thanks so much for coming on and sharing your insights today.
Thank you.